Well, let's start with what we know right now. So venture capital investors pumped $51.7 billion into agri-food technologies in 2021, which was a staggering 85% increase year on year. But where are we now? Where are we in Australia and New Zealand, and where are we globally? Joining me on stage, and because we're getting towards the end, I really want us to feel like a lot of energy right now, because we've got Michael Dean, the founding partner of AgFunder. Big ovation for Michael Dean. And Sarah Nolet, co-founder and general partner of Tenacious Ventures. Good. Now, Michael, AgFunder is one of the world's most active investors in food tech and ag tech startups. Now, I didn't know this, but it's increased its assets under management to 170 million now, which is huge. But of course, AgFunder would be better known to a lot of people through the work of the AgFunder News. But get this, a staggering 100,000 subscribers globally, which is much more than my mum's monthly newsletter, which goes out to the family. So well done on that. And in March 9 to be precise, AgFunder is again launching their annual Global AgriFoodTech Investment Report. Now, this is hot off the press data, so much so that literally Sarah and I have just seen it right now. So Sarah, you're being asked to comment on something which you've just been shown, okay? We're going to get a sneak peek. Michael's going to walk us through some of the headlines, and Sarah, with all of her extraordinary knowledge and her sense of all of the connections across Australia and New Zealand, will provide some analysis and some commentary. So, Michael, let's set the scene.
Thank you. Well, I only saw the figures this morning myself, so we're sort of flying a little bit blind. We're actually launching the report in 3 weeks in San Francisco, which will be the global announcement. But I've got a snapshot here to share with you, so we'll go through the figures and have a look. So this is the Global AgriFoodTech report that we do. We publish every March. And it's not all great news. So obviously we've had quite a lot of disruption to global supply chains and the food system generally, internationally. As you can see there, there's a number of figures there that look pretty good at first blush. But if you look at the numbers on the right there, we're down quite a way. So just starting with North America, 13.6 billion sounds great, but the US alone was over 21 billion last year. 2021. So we've had quite a substantial fall, but not quite as big as we saw in both South America and Asia. Both of those markets had tended to be driven, and the investment levels from venture capital tended to be driven by downstream. And by downstream, I mean more consumer-facing technologies. So we saw for example, food e-commerce, so delivery of food package, food packages. Think of HelloFresh or one of the delivery services, restaurant delivery. That was $18 billion on its own in 2021. So that's just fallen through the roof. Unit economics in those deals were, becoming challenging. And of course, they attracted a whole load of capital as a result of everyone being at home in COVID and ordering food in. So with that falling off, with the decline in alternative proteins, we've really seen those markets decline a lot. We also had a lot of generalist investors who came into the market post the Beyond Meat IPO in mid-2019. A lot of the generalist guys who hadn't been looking at agri-food, unlike Sarah and myself, who focus on this day to day, they came in, inflated valuations, and as a result of that, when things sort of went pear-shaped, they all departed and left us holding the bag, as they say. One bright spot there is Africa. Obviously, 19% increase is good. We sort of put that down to the availability of impact money, impact capital. There's a lot more programs that are supporting entrepreneurs in the African continent, so that's really great to see. I wonder what that would have been if we hadn't have gone through such a decline globally. But I don't know if Sarah has any comments about any of these, but it makes quite bleak reading initially.
I probably have more questions than answers. I don't know if you have any insights about deal volume. I know some of the drivers in previous years were really outsized rounds, like you mentioned, especially downstream.
Yeah.
Do we still see a kind of vibrant funnel coming through in the earlier stages?
Yeah, so we don't have sort of complete data on where the rounds are coming. We think that the early stage stuff has held up quite well, and that's the field we work in, where we operate. Yeah, I mean, just talking about the food e-commerce, there was a couple of $3 billion rounds in 2021, which really sort of inflated the figures, and they all went away. But yeah, I think we'll be, by the time the report's published, we'll be able to do that full analysis. But we really only finalised the numbers, well, last night in the US, this morning here.
One of the other observations or thought bubbles, I guess, is where deals get attributed to. What we've seen in Australia, at least, is now that the ecosystem has matured more, some of our companies have flipped up to become US companies, for example. And so their rounds, like Florisat this year, Cecil, would be attributed perhaps to the North American data. And so though they're Australian companies and delivering value in Australia, they might not count here. And so it'd be interesting to think about where these companies come from and where their customers are and who's getting value, probably divided on slightly different lines.
Yeah, totally. That's definitely happened with Australia, as you say. We'll talk about the Australian figures in a minute, but that's definitely a function. Oceania held up pretty well. Australia and New Zealand, primary markets there, 32% decline. Australia's was a little bit bigger on its own, but we'll just move on to this is a really interesting graph. It's really sort of a story of AgriFoodTech investing over the past couple of years. And just looking back at 2020, as you know, COVID had just sort of struck. News started emerging in January about this new disease coming out of China. Zoonotic diseases, became a thing as a sort of a global news story. But I think as COVID sort of moved forward, we started to see the disruption to supply chains, and we had situations like in Malaysia where they were threatening to close the border with Singapore, so no food was going across, and we had millions and gallons of milk being poured down the drain because all the shops had closed, so there was no distribution away from restaurants into retail. And so as a result of that, we started to see money coming into the sector as technology investors sort of realized that, we've got these massive problems in the food system, but technology is the only way we're going to fix them. So that's really what sort of led to the boom in 2021, and you can see the massive figures there that we hadn't seen before, those levels. The year before, in 2020, we were talking about 28 billion total, went to 51 billion, almost doubled in 2021. And then, of course, with the invasion of Ukraine, global inflation going through the roof, confidence just drained out of the market, and we started to see a real sort of cliff for venture capital investing, and that's been sort of really disappointing. A bright side to that is that a lot of VCs during that 2020, 2021 time period raised a lot of capital. And as a result of that, there's still quite a lot of dry powder available for VCs, but we just need the market to come back from a confidence perspective, and I think we'll see things sort of picking up, if not later this year, certainly early in 2024.
Yeah, one of the other observations, and I think Matthew made this comment yesterday, in COVID, we saw as investors that there was more appetite to invest anywhere. And so it opened up especially regional areas, especially non-traditional cities, because everyone was on Zoom or Teams anyways. And so probably another part of the increase, and hopefully something that we hold on to, especially in AgriFoodTech, that many of these innovators aren't in capital cities. Maybe they're in labs or in regional towns. So hopefully that continues.
Yeah.
I think the other thing, when we talked a bit about on the previous panel, Hermione was talking about so much of these challenges in solving these supply chain issues and in thinking about the resilience of COVID moving forward. Technology is going to be key to those solutions. So yes, we saw early entrants, but by no means have we solved those problems. So those tailwinds will continue to drive more innovation. And yes, market confidence is what it is, but there's no shortage of areas where we need solutions.
Yeah, that's
So
right.
what about supply chains for you? Where are you at? Is it doom and gloom? How do you feel when you look at this?
Well, I think this is pretty consistent with how the markets have been performing in venture markets, and I think it does go to confidence. I don't think it goes to anything in particular about agriculture and food. Maybe, and Michael, I think, used this term before, there have been some tourists coming into agriculture and food because there have been some headline numbers or hot areas, and so we've seen funding come in, and whether they stick around or not remains to be seen. But there's absolutely macro drivers. I mean, supply chains are under massive pressures to respond to what consumers want, to think about resilience. You don't have to look very far to see droughts and floods and hailstorms. We need new tools for resilience. We need broader opportunities throughout the whole value chain, and that's going to take both research and development, on-farm innovation, and venture-funded solutions. So probably because that's where we sit, but absolutely see massive opportunities throughout the value chain.
Yeah, and we're seeing, substantial impact from climate change, particularly in emerging markets where, land that was already marginal is becoming worse. We're seeing patterns of distribution for fisheries, they're changing as waters are warming. So there's massive problems that we've got to fix, and really technology is the only way we're going to do that. So, but let's have a look at Australia, a bit of a deeper dive into Australia. So pretty good numbers, really. Again, you look at where the money is coming. It's a little bit counterintuitive, the Australian market, compared to what was happening overseas. I just talked about people abandoning the food e-commerce, and there's Milkrun doing a $54 million round. Down at the consumer end makes sense, much bigger market. You're going to have more people, consumers, who are able to access the technology, as opposed to more upstream or midstream, where you're dealing with manufacturers or farmers, or a much smaller market. Val kicked the trend of the abandonment of cellular agriculture. I mean, that really took a bath late last year. There was a couple of people who raised big rounds through 2020 and 2021. Virtually no one did last year. It was just really, really bad. So Val, I mean, I know you'll agree, Sarah, but we put Val in the top 5 of cellular ag companies globally. Really well run, great strategy, and they're just doing a really, really good job here in Australia. Same thing, Nourish. Innovative food. That's an area of growth moving forward, and it's great to see Australian companies doing this. Same as LumaChain, midstream technologies that are helping to rationalise the supply chain, put more money in farmers' pockets, as Agri-Digital are as well. So really good outcome there. Lots to talk about and lots to cheer.
Yeah, a couple numbers that I ran. I know 5 is not necessarily data, more in anecdote land, but I'll provide a few observations. So if I look at female founders across these 5 companies, 40% female founders, that's something we see in ag tech, I think, more broadly, that we don't see in traditional venture, and we do see it even more in Australia. I think that's super exciting. Our portfolio is 55% female founders, not because we solve for that metric, but because we back the most badass founders, and they happen to be female lots of times. So I think that's an important point for this data here in Australia. When I look at deep tech, not all of venture, a lot of venture capital is software, but you can't eat software. And we look at these companies, again, sort of 40%, maybe a bit more depending on how you count it, are not pure play software companies. That's not for every investor, but is part of AgriFoodTech and part of what will deliver returns and impact here. Climate lens on many of these in terms of a driver. Again, sort of 40% of these companies, at least 2 out of 5, have a strong climate narrative. And then overseas capital. Which one of these raises attracted investment from non-Australia? We don't know about Agri-Digital. It wasn't public, but the other 4 absolutely had non-Australian investors, if not leading, then participating. And that didn't used to be possible, and we didn't even see it necessarily at the first evokeAG only a couple years ago. We really only had local investors, and now that's absolutely not true. We see overseas investors looking here, and this is absolutely evidence of that. The last thing I would point to is there's no one flavor of investor here. We've got venture capitalists in ag tech and climate tech and generalist areas. We've got family offices. We've got corporates. We've got ag tech specific VCs and even Australian super funds in these rounds, just looking at these 5. So I think that diversity of funding is also pretty representative of what we need in this sector and definitely need more of.
So just remind me, Oceania is down what percentage?
Totally 32.
And are you able to drill down to Australia? Are you able to share that yet?
Yeah, I'm going to on the next slide.
Excellent. Because that's what everyone's waiting for.
Jumping the gun. So this, again, another interesting slide. So this is talking about investment by category and then deal count for Australia, for the Australian market. by category, again, you can see downstream, right? So access to consumers really gets VCs excited because there's a potential for a big market there. You know, the other side of that is that, you know, you're subject to the whims of the consumer, particularly if you've got a CPG product. So it's sort of a bit of a balancing act, trying to pick the deals that are going to win, and VCs get it wrong an awful lot. So. But it's interesting that that's where the money's going. Midstream as well is obviously an area where, you know, people are focusing in on, particularly post-COVID and all the problems that we experienced. You know, how do we get these supply chains working? How do we get things working, you know, in a way that is going to provide, you know, clarity and you know, being able to get things delivered on time in a way that is you know, completely sustainable, and that's what these technologies are working towards. So just on Australia, you know, that figure there, 245.7 million, is a really good figure. You know, it's about 42% down on what it was last year, but it's 10% what it was of 2020 and 200% greater than 2019. So, you know, the trend is going up. We're moving in the right direction. And just to comment a little bit on what Sarah was saying about the variety of investors we have in Australia, we still need more angels. We still need more people who can come in early and take a punt on early stage entrepreneurs. But I think, you know, looking at the ecosystem as a whole, it is becoming incredibly robust and looking really, really healthy.
Yeah, I mean, the other thing I would add that's not explicit in this data is in 2019, I think we were just approaching first close of our fund. In 2020, we did first close, and we were the first kind of dedicated AgriFoodTech venture firm here. Now there are several others, and there are several other firms that also have AgriFoodTech as a focus, and then international firms in and out of AgTech that focus here or have a presence here at this conference. And so I think that growth of the ecosystem can't be underappreciated, that there really is a presence here and a focus. And I think that comes from the connection we have to the production agriculture system, the strength of the research system here. Where we probably can do better is the corporates. And it was interesting to walk around yesterday and today and see there are more corporates here and great sponsors and great interest. We don't see as much of their commercial teams here to sort of scout for and procure technology. We're starting to, but probably, you know, before the last 2 or 3 years, there wasn't much here to scout for, and now there is, and so we need them to come look here, and I think that's an area for improvement in the coming years.
Yeah, I totally agree, and I think there could be some policy changes to really help with that. You know, there's some really powerful R&D tax credits available in Australia, and I'd just love to see a percentage of that granted to corporates who invest in early stage venture funds or even startups. Allow them to take an R&D credit on that. That would really sort of stimulate the ecosystem, get more corporates involved. I mean, we've got in our funds, across our funds, we've got about 12 large food corporates and ag corporates who are LPs. Not one of them is Australian. I've never even got close to that. And I know there are some doing it. I'm not being mean about it, but you know, I would just love to see more activity from corporates in Australia. I think there's a lot of potential for that to happen.
The other thing that strikes me here is when you break it down this way, you know, some of the comments this week were around how much technology is there on farm and are producers really seeing the benefit. And one of the observations that definitely comes from this is not all of AgriFoodTech is on farm, and much of it is in that value chain, and that's such an important perspective because if everything was trying to be sold to farmers, then we all know the challenges with that. That's not where we should be, you know, spending our time, and so I think it's important to highlight the breadth of the sector, and especially where we see more capital, you know, maybe it should come upstream a bit more, and upstream isn't for the faint of heart, but it's by no means all on farm.
Totally agree.
So let me just come then. We've been looking at the numbers. Let's talk a little bit about what we've actually learned. Because, I mean, these numbers speak to one thing, but we've also lived through this experience and tried to do deals through this experience and tried to manage teams through this experience. So, Sarah, when you look at this and you think back over these last couple of years, like what have been the key lessons for us to then move forward?
One for us, for sure, has been given that breadth of how AgriFoodTech manifests. We don't just have on farm, we have in the supply chain. In our portfolio, we have organic waste management, alternative protein, on-farm robotics. It's quite a range, green ammonia, so different technologies, different parts of the value chain, different aspects of technical versus market risk. And so there really is no one possible partner for us in investing in these rounds, nor is there one canonical downstream investor. So again, we see our companies raising subsequent rounds from specialist ag tech funds, from offshore climate tech funds, from offshore family offices, from offshore corporates or onshore corporates, and I think that's part of the opportunity of AgriFoodTech is there really is so many different types of players, but it does break down, in alternative protein, we've seen much more traditional venture and climate tech VC interest. In other areas, you're talking to a whole different set of investors. So there's kind of no one playbook that we can run.
Does that correlate with your experience, Michael?
Yeah, definitely. I mean, we talk about tourists and generalist investors, but them coming into the sector was a breath of fresh air, because all of a sudden, I mean, we've got 81 portfolio companies, and all of a sudden there's a whole new bunch of people who we can be talking to about co-investing or coming to join around. So it's incredibly important that we sort of really promote AgriFoodTech as a real viable destination for venture capital or investment of all types. As these deals mature, bringing private equity on board, impact investors. They have only. It's only been since COVID that impact investors have started looking at the food system and looking at food tech and agri-tech as being a viable destination for their capital. So really encouraging that, I think, is going to be super important. Of course, when we talk about alternative proteins, they inflated valuations because everyone wanted to join the party, but which was a bit frustrating because we're spending other people's money, right? We're investing other people's money, and we try to be disciplined and try to sort of get as much value as we can. Obviously, we want to be founder friendly, but it's really about for us to survive and to raise another fund, we need to be able to return our investors' money, threefold, ideally, at least. So, we've got to be really disciplined about the sort of valuations that we can invest at. So having generalists come in who are used to being, perhaps more frothy software type valuations was a little bit frustrating. But generally speaking, everybody's welcome.
And can I ask Michael a question? Our impression is that definitely valuations in Australia overall are still lower relative to the rest of the world, and so there's both opportunity for companies to flip up and realize that latent value, but also a bit of a different example than in other ecosystems. Is that what you're seeing?
Yeah, totally. I think there's some markets that are... So the US has come right back. US valuations are really becoming sort of reasonable now. Australia's always been quite reasonably, really good value, essentially. The problem with Australian startups being an international investor or an offshore investor has been sort of where do we go from here? How big is the market you're addressing? How do we get you into the US where there might be 3 or 4 other competitors who are already more well established? So, we've made 2 investments in Australia. We want to do a lot more, but definitely from a valuation perspective, Australia is really good, really good.
This question: how do we go from here? Sarah, I want to take you one step back before we get there. And I mean, it's been a wild journey. A couple of years ago, Evoke didn't exist at all. I want you to briefly reflect, because you've been on the journey at different points and been integral in many ways as well. So, just give me a sense of how you're feeling at this point. And now, the obvious question is, what next?
Well, I'll never forget, actually, I remember where I was standing when John Harvey called me and said, hey, Sarah, I've got this kind of crazy idea. What if, there's World Agritech in San Francisco, what if we had a version in Australia? And it's kind of funny now because it just doesn't seem like that crazy of an idea. It's not only real, but we've come multiple years and we've got plenty of feedback and ideas for improvement, and we're already thinking about the next one. But that was a pretty crazy idea at the time. I reflect as well, I would be on stage probably a little bit before that at different events, and people would say, oh, we should have a dedicated AgriFoodTech venture fund in Australia. And I said, why? There's not enough deal flow. And then sort of 2 years later, I had to eat my socks because we raised one. And so it's truly come astonishingly far and really fast through lots of folks like AgriFutures, through GrowAg, through evokeAG, through the Australian Agri-Tech Association, through AgFunder's presence here. And I think the amount of people now and organizations raising the tide means that it's only going to continue, even though there's a blip in the data and confidence is what it is in markets. It's not just 1 or 2 people doing this and one event happening. It's truly an ecosystem that's building this and growing.
Well, on that, then, if we're standing on that precipice, what next? So let's jump forward. Michael, gazing into your crystal ball with all of this data that's just freshly off your laptop and straight onto PowerPoint.
Yeah, I think...
What can you imagine 12 months from now? Like, what are the conversations we're having? What might we see based on this information?
Yeah, I think we're going to have a tough few quarters. Maybe to the end of this year and into early next year, it's going to be pretty lean.
Well, that sounds like a tough year by the sounds of it, not just a few quarters.
Yeah, okay, tough year. We're saying to our startups, look, you've got to try and sort of budget for 18 months. If you're going out to raise money, just sort of keep it flat, unless you've got a super hot tech and there's investors crawling all over you. I think just sort of really try and just get the money in to survive and move forward. Cut your burn as much as you can, and really try and focus on product market fit and developing as much revenue as you can in the meantime. I think this time next year we'll be emerging from it. I certainly hope we are. We're still investing, we're still in the market, and I know Sarah and Matthew are, and most other VCs I know are. So I think once valuations become more reasonable and founders sort of get the message. Unfortunately, through the press, and AgFunder's guilty of that a little bit. AgFunder News of promoting the big rounds. Sometimes founders get the wrong impression of what's happening in the market. But it's good to tell the good story, the good news stories. But once I think we sort of see that equilibrium return, we'll be back. We'll be back to investing again, and things will start kicking off.
Sarah, how do you feel? Do you feel similar in terms of the next 12 months, or do you read it differently?
No, I think it's going to be tough times, but I think good companies will continue to raise money. And again, to that diversity of follow-on funding options, it's not like we're just going to venture capital. There's a whole broader ecosystem of sources of funding. And in Australian agriculture, there is a lot of capital. In our research system, there's a lot of capital. In our corporates, there's a lot of capital. And so there's a breadth of sources for that funding, depending on where you're at. One of the things I do think we'll be talking about more next year and beyond is it's not just equity funding, especially given these solutions are not just software, they're physical things often. There'll be project finance, there'll be debt, there'll be other types of capital that once the demand is established and the widget is built, that can fund that growth path. And so we'll be talking about a much more mature ecosystem of finance, and that provides more optionality and less dilution for founders, which is so important. Okay, finally, your mic drop moments for a vote. So Michael, to you, what's been the conversation you've been most interested in?
I haven't seen that many because I've been crunching the numbers. So I can't really answer. The ones that I've seen, I think it's everyone has. It's just the development and the maturity of the Australian agtech market. I think what's happening now in Australia is really impressive. One of the major reasons for that is Agri-Futures and the team that John has built, and what they're doing here to really promote AgriFoodTech in Australia is extraordinary. And just like Sarah said, I actually spoke to John in San Francisco when he first was thinking about it, and he was casing out the competition. And he said, "Are you opening a fund in Australia?" And I was like, "Shit, no! Of course I'm not opening a fund in Australia." But Sarah and Matthew went and did that, and it's fantastic. But John had this idea to build an ecosystem in Australia, and that's what we've got now. It's something we should be proud of.
Mm-hmm. Sarah, any mic drop moments?
One of my favorite conversations every year at evokeAG is some people say, where are the farmers, and we're not boots on the ground enough, and we need more producers. And other people that I've went to the startups and said, you've come here with an OptiWay or a Zetify system or an AgriProof system, and you've invested time and money in your team being here. Is it all investor focused? And many of them have said, no, we covered our costs in selling our tech. We've signed partnerships. We've talked to growers. And so I think, Sam Trethewey, who I love, was on stage this morning and made the point of, where's the ag tech? And everyone clapped. And it's easy to say that, and it's easy to, talk about how we need to do better, and we absolutely do. But when I think of the pressures that the agri-food system's facing, when we think about climate resilience, when we think about supply chain pressures, we need these solutions. And the more it's sort of a tech versus ag or a funding versus startups, we all lose. And so I think there's a real opportunity for this room in particular to say, let's back these solutions and build them and think about how we can make them better, not where we can throw stones, because it's truly up to people in this room to have those insights and those collaborations. And there's so much potential and so much need. We don't really have time to wait.
Feels like you've just added another mic drop moment to the list right now. Sarah and Michael, can you please give them a round of applause?